today's topic, we're going to talk about portfolio loan products available, okay? Because there's a lot of self-employed borrowers and investors who don't qualify for conventional mortgages. So what do you do? Where do you go? Paul Salcone with Northpointe is here to share that with us. Timely, it's very timely too, because right around tax season is a great time for self-employed borrowers to start talking with a mortgage lender. So not all one size fits all with mortgages, Paul. So you guys have different programs such as the portfolio loans. Can you tell us a little bit about those and, who might be the best for those?
Absolutely. Thank you, Emilio. So yes, as you know, not all borrowers fit in the, the conventional guideline box, so to speak. Therefore, we need options. So many investors, self-employed borrowers, they obviously want to buy homes, investment properties. So how do we get financing in this day and age? I mean, traditional methods, will work sometimes, but maybe with a certain borrower, they want to make their life a little easier. What I mean by that is, let's say you're self-employed and you have to get your tax returns filed and, maybe you're looking at 2-year histories here. So we're trying to figure out what can we do to make this easier for them. So we have a program. We'll start first. It's called the Investor Cash Flow Program. This is a program geared toward obviously investors who maybe, have different means of showing their income. So rather than using traditional methods of, say, tax returns, W-2s, pay stubs, rather than using those means, we'll use something basically rental income only. So what we'll do is it does require 20% down, as most investors are aware. That is common. Yeah. So, you have to basically have 20% down. And we look at not necessarily your income, but we look at the income of the particular property, up 1 to 4 unit properties. So say, for example, it's a 4 unit and let's say rental income is, $1,500 per unit. Essentially, it's $6,000 a month that the property will bring in. So what we do is we calculate what your mortgage payment will be, principal, interest, taxes, and insurance. And as long as that total payment is less than what rental income will be, either projected rental income based on the appraisal fair market value or lease agreements, you're approved. So essentially, does the rent cover the mortgage? If it does, you are approved. There's no additional, documentation beyond running credit and down payment. So it is a way, to get investors who maybe, don't show positive, income on their tax returns to get approved for mortgages. And we can do this for up to 5 loans at a time. And each one's only based on that particular property and mortgage payment. This is the first program called Investor Cash Flow. It's also known as DCSR. It stands for, it's a debt coverage service ratio loan. That's what this loan is. So that is the first program I wanted to talk about today. And we have a couple others now. We talked about investors first, and now let's talk a little bit about self-employed borrowers, maybe who are looking to, purchase their first home or maybe a second home, who knows what. As you know, many self-employed borrowers, in certain industries, restaurant world and, gas stations, things of that nature, they don't always have tax returns that reflect income dollar for dollar. Sometimes there's expenses they incur or write-offs, as we know. So how do we qualify these people who don't qualify for conventional financing? So one of our more common programs is called a bank statement program. And this is based on borrowers who have cash deposits on a monthly basis, liquor stores, restaurants, gas stations. So what we'll do is we'll use either a 12 or 24-month average. We'll look at your bank statement. So let's say, for example, you have a business checking or savings account, and each month you show $10,000 a month for deposits. We'll look at a 12-month or 24-month average, depending what works best for the borrower. And at that point, we use that as your income versus using your, Schedule C income or your actual tax return. So it's a way we can turn cash deposits into income, and we'll qualify you based on that as long as the history is there. One more program that I wanted to mention about, it's called asset depletion. Now, this program, again, another portfolio loan, it's, 30-year fixed rate program, but we look at, this is more for the retirees. Okay. People that maybe, obviously had income throughout their lives. Now they're retired. Maybe they want to downsize, or maybe they want to buy a second home in Florida, New Hampshire, who knows where. This program, what we do is rather than look at your, say, Social Security or pension income, we'll take your overall assets. Let's say you have a 401k. We'll take whatever the balance is in that account or numerous accounts, and we'll divide that over 10 years. And essentially, whatever that number is, that's your monthly income versus using. So if you have a huge 401k and you haven't actually pulled from it yet, but you do have it available, we can take that and divide by 10 years, essentially doing that to say that, next 10 years or so, you could definitely qualify for this loan. And that's a program we have called asset depletion. And it's, works almost like an IRA distribution, but yeah, we kind of do it internally, just looking at your assets and divide it out by 10 years. So it's something for people that are self-employed.